Hey, MCE crew. In the last week, there were two huge developments in the digital asset space that you need to know about. The world is changing. The whole concept of money, debt, all of that is being rethought and reset. And you need to be at the forefront of what's going on. Now, I don't care if you invest in crypto or any other kind of digital asset or not. You need to know what is taking place, because if you don't, you're going to be operating at a deficit. And we're just not going to have that amongst this community. We're going to be on top of things. We're going to understand how money is evolving. And to that point, Evie, one of our viewers, I appreciate you and I've heard you. She said, I want to learn more about crypto. You know what, Evie? I need to learn more about it as well. To that end, we've partnered with Adam Thorpe over at True Perception Investments. And I'm going to leave links to his YouTube channel and his Facebook page in the description. He is a digital assets expert. He's going to walk us through how all this stuff works. So stay tuned for that. For now, let's cover these very important developments in the world of digital assets so that you know how to maneuver on your road to financial independence. Let's go. Hey guys, before we get started, one small favor. Go ahead and just hit the like button. Just hit it, tap it, easy peasy. Go ahead and share this video with someone and subscribe if you haven't already. We are really adamant. We're on a mission to help people achieve financial independence in a world where money is changing. Changes are being made every day. Let's hop into two of those changes in the digital asset space. First up, from the Wall Street Journal. And as you know, I will link to this in the description. Bitcoin to bucks. Crypto fans borrow to buy homes, cars, and more crypto. Upstart lenders make it easy to take out loans backed by cryptocurrency holdings. Regulators are watching. So look, right there, we've got a whole new crop of lenders coming onto the scene. They're not banks, all right? Banking is being disrupted. As I tell you, you probably say this guy sounds like a broken record. So be it. As I tell you all the time, banks are one financial institution. What do you want from a bank? Money. You want them to lend you some money. A bank is not where you're going to have your money grow and really work hard for you. All right. We've talked about that ad nauseum. Let's get into this. Michael Anderson mined Bitcoin in his dorm room and left a corporate job to invest in cryptocurrency projects. When he bought his first home in San Francisco this year, he didn't turn to a bank. Instead, he borrowed against his cryptocurrency. Now, first of all, this guy's bought a house in San Francisco. That's some expensive real estate. All right, so he's doing something right. Now, when they say he borrowed against his cryptocurrency, understand, we've been over that aspect too. You can borrow against your own assets. We just did a video on how you can set that up. You don't have to be a tech millionaire in order to do that, okay? So watch that video when you are done with this one. Crypto enthusiasts such as Mr. Anderson are tapping their holdings to buy homes, cars, and often more crypto. They are getting these loans from upstart non-bank lenders and automated blockchain-based platforms. All right, guys, this is huge. We see the banks. They've been in control for so long, all right? Remember when you wanted to catch a ride from one side of town to the other and you only had the option of a city bus? One day I'm going to tell you about my last ride on a city bus. It was a wild ride in D.C. Or a taxi cab. Now you've got Uber and you've got Lyft in addition to those options. So it has been, the playing field has been really disrupted, but you have more choice. The same is going on now with the banks in relation to crypto. Like banks, these lenders typically take deposits. Unlike banks, their deposits take the form of crypto. The crypto deposits, which earn higher than average interest rates, are used to fund loans to borrowers who pledge crypto as collateral. These loans take many forms. Borrowers can get dollars or other traditional currencies or stable coins pegged to those other currencies, depending on the lender they're working with. That is monumental, okay? We have a whole new way, and usually, you see these kinds of special arrangements for very wealthy clients where they can, take a piece of artwork and use it as collateral or something like that. And that's great. But now we're seeing this democratization of this asset world where you can actually get some crypto. And my God, what is Bitcoin at? Over $50,000? And look, I am just reporting what's going on. I am not making a suggestion that you should run out right away and trade in all your other assets and buy crypto. I'm not saying that. I'm just giving you a window into how money is evolving, how finance is evolving. And just like with the internet democratized a lot of things, including media. That's why I'm able to come to you on this platform today. The same is occurring with money. And you saw a lot of newspapers. Newspapers have taken an incredible hit, all right? Will banks be the same in this new money revolution? All right, let's read a little bit more, and then we're going to move on to the second huge development in the digital asset space. The business is growing rapidly. One group of crypto lenders has $25 billion in loans outstanding to individual and institutional clients. That's big. Okay, because it's saying it's not just, regular folk doing this. They're institutional clients as well. Businesses, maybe pension funds, maybe mutual funds that are out there playing in this space. This is up 25 billion. This is up from 1.4 billion just a year ago, according to the crypto research firm Messari. People use crypto-backed loans for the same reason they borrow against their stock portfolios, to reap the benefits of rising prices without diminishing the size of their bets. Ether, for example, has risen nearly tenfold in the past year, eclipsing the interest on the average Ether-backed loan. Borrowers can also use this strategy to avoid capital gains taxes. And you know what? At the Money Changes Everything channel, we're all about legally minimizing our tax obligation. All right, we got to take the good with the bad, so let's get into some of the challenges. The strategy, in turn, comes with real-world risk. Like traditional securities-based borrowing, crypto loans are typically for a percentage of pledged holdings. If the value of the collateral falls, as it often does in the volatile crypto market, we've talked about that a lot, the lender can issue a margin call and seize it all.
You know perfectly well we don't have $394 million in cash.
I'm sorry, boys. Put the Duke Brothers seats on the exchange up for sale at once. Seize all assets of Duke and Duke Commodities Brokers, as well as all personal holdings of Randolph and Mortimer Duke.
Right.
Should a lender collapse or fall victim to a digital heist, there is no federal insurance to compensate the depositors. Okay, for our next huge development in the digital asset space, we're going to head over to the Financial Times. The Financial Times can be considered the Wall Street Journal of London. Remember, London is a financial capital of the world. And I love the Financial Times because if you've ever seen their newspaper, it's actually pink, just like their website. Central banks must act now on crypto boom, Benoît Coeuré says. Now, sir, if I've mispronounced your name, I'm sorry, I don't speak French. Policymaker warns decentralized finance and stablecoins will challenge banks' business models. We just saw how that's happening with the previous article from the Wall Street Journal. All right, so this individual that is, telling the banks that they're going to have to step it up is from an organization called the Bank of International Settlements. The Bank of International Settlements is the central bank of central banks. All right. This is a very serious organization. Now, I know a lot of people got problems with central banks. Fine. I'm just telling you what's going on. Okay. Whether we like them or not, these are the developments that are occurring. Stable coins and decentralized finance, you might hear that referred to as DeFi, will challenge banks' business models and monetary authorities must act more quickly to develop official digital assets. Veteran policymaker Benoît Coeuré said in a speech on Friday. The comments from Coeuré, a senior official at the Bank of International Settlements and former member of the European Central Bank's executive board, highlight the increasing angst among financial authorities over the boom in cryptocurrencies and other digital financial innovations. So what we're seeing here is the Bank of International Settlements, the central bank of central banks, is saying, hey guys, we're losing control of this. You guys got to get on this. Start to get your regulation game in full effect. Start to get your own central bank digital currencies out there on the market. This thing's getting away from you, okay? Coeuré said both decentralized financial firms and stablecoins, a store of value in the digital asset market, pose a threat to depository institutions and intermediaries such as banks. Central banks and financial watchdogs now face urgent questions on how to respond, he told the Eurofi conference. So these nations that the central banks are operating from, these nations are getting kind of nervous here because can you imagine if the U.S. dollar doesn't hold the same hegemony that it does now, okay, which I think will occur I think the dollar will lose its supremacy in the early 2030s, maybe even earlier, if Coeuré is saying if they don't do something quickly to address the rise in prominence of these digital assets. Okay, this is a direct quote from him. Central banks have a job to do, delivering price stability and financial stability, and they must retain their ability to do it, Coeuré said in a speech called Central Bank Digital Currency. The future starts today. Quote, they have to act while the current system is still in place and to act now, unquote. Look, I worked in DC, that I was a lobbyist, and I'm going to tell you one thing. This guy's language to, those who may not have had the type of experience that I've enjoyed may seem pretty placid, okay? This guy's screaming from the rooftops, all right? He is saying, hey, guys, get it together quick. We're losing control. All right, I'm going to read two more lines from this, and then I'm going to let you guys go. But they're very interesting lines. He also said central banks and regulators needed to consider what roles banks would play after the advent of central bank digital currencies and the role of intermediaries in a digital financial system, as well as the implications of the design of these new assets. Right, because you don't need to put your money per se in Wells Fargo if it's a central bank digital currency and you've got some crypto wallet out there to put the money in. And we saw in the previous articles that, institutions are popping up to allow you to perform the borrowing function. Look kind of shaky for the banks. Coeuré said central banks view traditional financial firms as part of the new digital currency payments infrastructure. Quote, but make no mistake, global stablecoins, DeFi platforms, and big tech firms will challenge banks' model regardless. So I think one thing that comes out of this is we'll probably have to rethink whether or not we continue investments in banks. Long-term viability of banks may not be there unless they can come up with some way to really serve the digital asset market. You do not need a bank with a CBDC, okay? Central Bank Digital Currency. The world is changing, my friends. We're going to continue to cover it. Look out for more on collaboration between me and Adam Thorpe on True Perception Investments, where he covers this digital asset class like nobody's business. All right, so I'm going to let you guys go. Please go in and hit these links and read these articles. You need to know this stuff. I'll talk to you soon.